Are you curious how much a business valuation costs? That is probably the number one question I receive on every inbound inquiry about business valuation and valuing a company. So when individuals contact us at Peak Business Valuation, they generally want to understand kind of what our process is to help them understand the value of that business, but also what they should expect from a deliverable standpoint, what documents and information they need to provide in order to receive a business valuation, as well as kind of what is the cost associated with it and how long does it take. So, let's chat about that whole conversation. More importantly, what you should expect when you jump on a free consultation when you chat with a member of our team at Peak Business Valuation. So, and right off the bat, if you ever want to have a conversation with us, you can always call us at 435-359-2684, or you can visit us at peakbusinessvaluation.com. So, a free consultation, typically it's around 15, 20 minutes. And when someone schedules a time to chat with myself, they will receive a calendar invite for that conversation, and it's a phone call. So, when we jump on the call, my primary objective is to understand the scope. So, why do you need a business valuation? Why do you need to understand the value of your business? Are you going through a divorce? Are you going through a partnership dispute? Are you looking to sell or buy a business? Or are you generally just trying to understand why you're building your company and what the value is today so that you can go from here to here? So, objectively, there are an array of reasons why individuals call us outside of business valuation because we also provide equipment appraisals, helping individuals understand what a Kentworth truck costs, or what is the associated value with all my FedEx truck vehicles. So we do a lot of equipment appraisals as well as business valuations for an array of many reasons of why people need them. And then we also provide quality of earnings as well as feasibility studies for individuals buying businesses or selling. So with respect to the rest of the consultation, like my goal, understanding the scope, but on the other side, it's addressing also your questions. What questions do you have with respect to how do you value a business? And helping an individual understand that process helps them understand exactly what we do. Because a lot of individuals, they think it's very straightforward with respect to, oh, this is my profit. And so I apply a multiple to my profit to get to what I should be selling at. And from a simplified explanation, that is appropriate. However, in the instance that your business has declining revenue or very aggressive growth in revenue or changes in expenses, there are a lot of aspects that, from just a financial standpoint, impact what you would be transacting at from a multiple standpoint. Because a multiple at the end of the day is a measurement of risk and return. And it's more complicated from our standpoint because we do hours and hours of research to one, understand what is your true cash flow and profitability for the company. Because most companies don't even understand what their profit is. And if they don't understand what their profit is, applying a multiple to that profit doesn't make any sense. So, from that angle, we help them understand first what the cash flow is. Once we understand cash flow, which is either represented by ebitda, which is earnings before interest, tax, depreciation, and amortization, just a fancy finance word, or there's seller's discretionary earnings, which is what cash flow is available to you as the owner of the business. So from there, once we understand the cash flow, we can dig into all the different private transactions of companies that have taken place over the last couple of years to understand what the market is presenting from a transactional standpoint of such and such company related to you transacted at X. And so, therefore, this is what I would infer if we applied those same multiples to your business. That's one way to understand value. But at the end of the day, it's also important to see that those businesses transacted. And if they transacted, there's two value propositions. There's a value associated with the terms of the transactions, which shows up in legal agreements of your purchase agreement. And two, there's a value associated with your business. So those two values together determine what value you are transacting at, which is your purchase price. So looking at transaction multiples is great, but at the end of the day, we consider it a guideline. It is not super definitive unless your business model transacts on a weekly basis. So for instance, Subway franchises, they transact on a weekly basis. FedEx routes, weekly basis. So if there's a really active private market, then we can rely more so on comparable transactions. The other approach that we look at is called the income approach, where we're looking at the cash flow of the business on a historical basis, or we're looking at the cash flow on a future basis and determining, okay, based on the cash flow and the risk associated with achieving that cash flow, what is an appropriate value to conclude to? And there's a lot of research that goes into that. But ultimately, kind of going back to why I originally wanted to have this YouTube episode is to chat about what we talk about on our free consultation. So ultimately, walking through our valuation approaches is important to help you and educate you so that you understand what to expect. And then we chat after that, we chat about the deliverable and the document request list. So, what does that document request list include? So, it itemizes all the information from documents to questions that we have in particular to your industry and business model. And we'll send that over through email as well as a sample valuation report so that you can understand kind of what to expect when we ultimately perform a business valuation for you or an equipment appraisal. And you can kind of see beforehand, oh, this is what it looks like, and it's in a different language. Because business valuation has to follow kind of more of a structured format based on the credentials that we hold as business valuation professionals or equipment appraisal professionals. And so for that reason, there is a lot of jargon, but our goal is to help you understand that valuation report. So following the delivery of that valuation report, we jump on a call with you and discuss any questions in that valuation report in detail. So kind of recap. So when we jump on a free consultation call, we're going to discuss first off, what is your reasoning for business valuation or your need for an equipment appraisal? Two, we're going to discuss how we perform our valuation or equipment appraisal process. Three, we're going to discuss what documents we need and are deliverable. And four, we're going to discuss costs as well as time frame. So cost is important because for us, we determine costs based on the industry in which your business is in and comparing your business versus that of all the other businesses within the same industry that we've worked with. We could kind of look at a major C, as well as looking at kind of how large is the company, how complicated is the company based on a gross sales or revenue standpoint. So those two factors, as well as the scope, help us determine a price, a fair price for the business, or not the business, for the business valuation and for the equipment appraisal. And then from the standpoint of time frame, like we also look at that same matrix and look at, okay, the same business, same scope, same revenue took this long. And so we can kind of use that as a gauge, but from a more of a pulse standpoint on peak, like we value around 20 to 25 companies a week. and we perform equipment appraisals every week. And so from that standpoint, we know what to expect from a time frame. So we could give you an accurate time frame of this is how long it's going to take from start to finish. And then I always put a caveat on it because that time frame we can always hit it, but it also depends on you. Because if we're going to do a business valuation or an equipment appraisals, we need clear, concise, transparent communication with you about questions that we have because you live in your business or you are performing your due diligence buying a business or for any other reasons why you need a business valuation. And so by like our goal is we need to understand this business. And so by understanding this business, we're going to have a load of questions and information need. And so that document request list that we provide to you up front is great, but it only collects about 60 to 70% of the information we need. Because every business outside of that document request list, it's all personal. It's all individualized with respect to that business. So this is a long video. Didn't expect this to take this long, but totally cool. So if you are looking to get a business valuation or an equipment appraisal or a quality of earnings or feasibility study, visit us at peakbusinessvaluation.com, which I would assume would be in our comment section on this YouTube video, or feel free to give us a call at 435-359-2684. Let's have this free consultation and chat with you about why you need to understand the value of a business. And ultimately, my goal, because right now I handle a majority of the calls, is to help you understand what business valuation is, because typically it is a foreign concept to most people. Business valuation is just a fancier way of saying what is a business or an asset worth. So if you have questions, give us a call. Again, my name is Ryan Hutchins, and it has been a pleasure producing and putting together content for you. My team loves putting forth content. It's sporadic and covers an array of topics, but ultimately we are trying to get word out to everybody that you do not need to be in the dark with respect to understanding the value of a business. You should always know and have a pulse on what the value of a business is, especially if you own that business, so that when time comes, you can sell it or you could get your business ready to sell. Because most businesses in this country fail. So don't be one of those. Understand, be educated, be proactive, and be a diligent doer because anyone can grow a business. It just takes time and patience and dedication and consistency. So all of those are just words. But I know that you can build a business. I've done it with multiple businesses, and I know you can. And so really it just starts with talking with the right people. If we're not the right people, we're going to put you in touch with the right people. So I'm going to end right there and let you kind of decide whether or not you want to talk to us at Peak. So again, visit us at Ryan, or what am I trying to say? Visit us at peakbusinessvaluation.com or give us a call 435-359-2684. Thanks.